President Trump's continuing his pattern of blaming bad news on other people. So we've had some turbulence in the markets. We've had the layoffs by General Motors that were announced yesterday that so angered the White House. And the president now in an interview with the Washington Post has said, I'm doing deals and I'm not being accommodated by the Fed. They're making a mistake because I have a gut. And my gut tells me more sometime than anybody else's brain can ever tell me. I'm not even a little bit happy with my selection of Jay Powell, not even a little bit. Of course, Jay Powell is the Federal Reserve Chairman who President Trump put in that job. He's somebody who has signaled that they intend to raise interest rates again and more in 2019. The president says that that is creating economic consequences that hurt him. He's lashing out.
John, thank you. John Harwood in Washington, D.C. And, of course, this is going to renew talk about the Federal Reserve Act and what powers the president may or may not have to actually remove a Fed chairman. The language apparently in Section 10 is thereafter each member shall hold office for a term of 14 years unless sooner removed for cause by the president.
What is cause?
We don't know what that means necessarily. But here the president is expressing some, I don't want to say some even. He doesn't like the guy.
Well, he doesn't like the policy because it's not suiting the economy. And again, if the Fed is moving, it means the economy is strong. Let's not get into this, but it seems to be common sense. If anything, Guy talked about this. Doesn't this paint the Fed further into a corner? Doesn't this paint the Fed actually into possibly having to defend the integrity of the institution?
But what is that corner now? Is that corner a hike in December plus a hawkish statement? Or can the corner, something that still have a hike plus a dovish statement?
Well, something that shows that the Fed is totally independent of exterior, externalities, and at least as they relates to forces and influence, as opposed to economic data.
Right. But let's say they were intending on releasing a dovish statement after the meeting. Are they going to now switch to a hawkish statement?
I don't think so. I don't think so at all. I don't think. I mean, presidents have criticized the Fed for years. Maybe this is harsher than typical or that we're used to. But I don't think that the Federal Reserve, I don't think Jay Powell, I don't think Vice Chairman Clarida is the type of person that is going to change their mind about the economy because the president's upset.
See, it's interesting. Then candidate Trump was critical of the Fed for keeping rates too low and creating a bubble and creating a stock market bubble. He was probably correct at the time. In my opinion, you can't have it both ways. And again, my opinion.
What's in your gut?
My gut is sometimes better than people's brain, but I will say
depends on whose brain.
I will clearly.
Quite a gut. By the way, quite a gut. Yeah.
I think this Fed isn't making a mistake. They're trying to clean up the mistakes of two prior Fed chairs, in my opinion. So I think they're doing everything. If again, the greatest economy in the history of the republic, not my words, the president's. If we can't stand rate hikes to get us back to some semblance of normalcy, then maybe we're in worse shape than everybody thinks.
I think because Bullard and Clarida had come out already in front of this, I think they actually can smooth sail to where they're going to be going for 2019.
Which is data
dependent. And data dependent. They're going to be looking at things and they're not going to be influenced by the White House. Now, that being said, I still think they also stick with what they're doing because they don't want people to think they're being manipulated. So that's why I'm more and more confident December
if the president elevates this talk about not liking Jay Powell, not liking what the Fed is doing, and there is actually more talk of possibly finding a way of maybe replacing Jerome Powell, what would the market reaction be? If the goal is to keep rates low.
If the goal is to keep rates low, you probably have a lower dollar. Your emerging markets would probably rip, and it might not actually be that bad for the stock market. I mean, you look at other countries that have gone down that road where all of a sudden the central bank is, let's call it, compromised. Their stock markets rip because their dollar collapses, their currency collapses.
Well, let's look at long-term rates here, because this is the part of the market that the Fed can't control. Right now, that's telling you that, first of all, 325 looks like major resistance, and actually 305 is major support right now. If anything, the market is telling you that the economy is running into forces in terms of headwinds to growth, and that actually the economy is not a runaway train, and therefore, maybe that's telling the Fed something as well.
Good or bad for the stock market?
If Powell were to...
Powell's removed, but the promise is that the next guy won't raise rates so fast.
It's interesting, right? I mean, the knee-jerk, I think, is higher. But then I think if people examine what's really going on, if we have an administration that can, at the whim of a stock market sell-off, can replace Fed chairs, That to me is somewhat problematic. I think that's longer term extraordinarily bearish.
So I go back to the example of GM that we all dismissed at the top of the show. Not such a big deal that the president goes in and intervenes in a private company and says, basically, we're going to rip away subsidies that the federal government promised you because we don't like what you're doing with jobs. Here he is. I don't like what you're doing with Fed rate hikes.
It's pretty amazing.
Does this start a pattern here?
I think to Guy's point, I think to Guy's point in terms of how this could play out, I think you're right. I think the knee jerk would be, well, this is a positive, but longer term, that can't be that the president can sit there and dictate exactly who's going to be there and how they have to react. Under those circumstances, why even have a Fed chair?
Look, it's a tough analogy, but I mean, central bank independence in Turkey is one of the big reasons why that market went into you know what. I think you have some dynamics here, which the Fed has always, and I think Brian has said this well. The Fed has endured a lot of pressure from a lot of past presidents, and I think the Fed has held its ground and been allowed to run as an institution. I expect that will continue to happen. I expect this president, who likes to jawbone, and often it's very effective. Often, he gets what he wants. In this case, my guess is the Fed's going to continue down the road they always go down.
Yeah, so far this has been all bark and no bite. So until there's some bite, you have to go to the assumption that
the bark is getting louder.
Well, maybe, but the reaction's
way
getting
louder.
the bark's getting louder, but the market reaction's getting less.